Welcome to Trade Delicious's Bulls vs Bears, where the investing market meets gladiatorial combat in a battle for all bragging rights. Our contestants will be armed with a hefty $100,000 starting capital, leverage 1 to 10, and be given a single electrifying hour to out-trade each other. Their weapon? Real-time market data. Their battlefield? Designated assets via the hosts. But be careful, traders. A maximum drawdown of $5,000 stands as a pitfall you cannot afford to tumble into. And remember, this is a game of wit and skill, of strategy and performance. There will be no copy trading and no EAs allowed. You must stand your own ground. And to our viewers, you are the arena crowd, watching every strategy unfold live, every decision that has consequences, and every moment bringing these traders closer to victory or defeat. This is not just a trading game. This is Bulls vs Bears. This is the thrill of the financial arena right here on Trade Delicious. Let the games begin. Welcome back to Bulls vs Bears episode 9. We're going into the quarterfinal, guys. If you're wondering why we're laughing, unfortunately, Vincent is having some connection issues, so there's going to be a little bit of a delay between when we speak. But Vincent and Tee, welcome back into the trading arena, which we call Bulls vs Bears. Alex, it's great to see you once again. We'll start off with you, Tee. How are you feeling ahead of today's trading session?
For me, I'm feeling fantastic. I'm good to go. I'm ready for this challenge up against Vincent. We've got a nice rivalry in history, me and Vincent. So yeah, I'm looking forward to it. I'm looking forward to seeing how much he's progressed as a trader. And yeah, let's do this. I'm excited. I'm ready.
Fantastic. And Vincent's just messaged me there to say there's an issue with the account, Al. Are you able to quickly refresh that? In the meantime, Vincent, if you can hear me, how are you feeling with today?
I'm very, very tensed.
Very tense.
I'm coming up against my mentor. Yeah. He is my mentor. Yeah, he helped me a lot along the way. He taught me many of the things that I know today. I really appreciate that.
That's interesting. Yeah. I mean, it's a joke, or you actually taught him some stuff?
Yeah, Vincent reached out to me. Vincent reached out to me when he first joined the Fivers, actually, and he reached out on some pointers. I was just directing him on some stuff that he could add to his trading, some different concepts. And over the years, I think it's been now, like we've been communicating regularly. I've been helping him. He's been learning, and now he's his own self-sufficient trader. Now he's doing absolutely amazing. So it's gonna be good. The mentor versus the apprentice. Who's gonna come out on top?
I love it. And if I heard that correctly, did you say years?
Yeah. I think it's been a couple of years now, Vincent.
We've got a lot of traders in the Fivers that have been with us for years. Many traders that have been, even yourself, T, you've been with us for a few years as well.
Yeah, that's correct. I think it's been about a few years now.
Beautiful. Well, let's.
With regards to that trade that was already open, we'll sort that out anyway, so we can get started and everything. And I'll get one of the guys to sort that out.
You may begin trading now.
Let's go.
All right. Thanks.
His big smile on his face, excited. Oh, that's interesting. That it's a mentor versus the mentee.
Mentee, yeah.
We'll go with student. Is that what it is? The mentee. But awesome. I'm excited to see how this goes. So you guys have got a bit of a backstory then. You're going to have a bit of competitive nature here, right? Like, one of you is going to really want to win because this is bragging rights. Surely. It's got to be there. It's got to be there somewhere. But I can imagine it is. T, how are you feeling ahead of today? What are you looking at straight off the bat here?
With me, I'm a major trader, so I'm always looking at my majors, GU, EU especially. So that's what I'm having a quick browse to see if we're in any specific points of interest that meets my my strategy entries and so forth. Holistically, I'd like to be doing the top down, but as long as I can spot any kind of zones on the daily or the 4 hour, and then I could just drop it down and work with something on the lower time frames, just due to the nature of the competition that we're in. So far, GU, I might see if I can possibly snag a lower time frame buy, but we are at the top of a lower time frame range. It's not ideal, but we have to make do. EU, almost identical in relation to GU. Same situation. Possibly looking. See on the 15 minutes. Yeah, there's not too much to play with at the minute on my two main ones. Then I'm just going to drop it down through the rest of the majors as well. See once again if I'm in any points of interest that meets my strategy requirements. Any either imbalance zones or any specific price actions that I can enter in on the lower time frames and take it from there. So I'm just going to work my way through the list as quickly as possible, and I'll see if there's anything that aligns on any of my usual pairs that I trade. Focus heavily on the majors.
Yeah.
Having a look at GU there, we've obviously seen a bit of pump of volatility over the past hour or so, right? Like it's moved a fair bit. When you drop down on that 5-minute chart, you can see the real push that it's had. Does that what does that do for your analysis when you look at this pair? A lot of people will see movement like that and be like, no, there's something else at play. I don't want to touch it. We're overextended. A lot of other people like myself look at that and see opportunity. I'm like, this is what I'm looking for. What do you think when you see moves like this and such aggressive moves in a short amount of time?
I like it actually. For instance, in this situation, you could class it as depending on how you play it, as a quick dip below liquidity, and that could be the signature indication for the aggressive move. It could be a run on a lower time frame stops it that's given it enough of a drive to move away quickly. So my strategy would encompass looking at possible retracement to a specific area and trying to get in, as opposed to just trying to get in from where it currently is. So it can be a case of price looking to start turning around on GU. It's been bearish for quite a while now. Lower time frame indications could be the start of a little bit of bullishness. So if that's the case, then on the lower time frames, I will be looking to try and get in. Maybe not to go too tight on the stops, but overall, that's what I'd be looking for. But
when you're in an overall bearish market, let's say you're looking at on a bearish pair like GU, and you're looking obviously, maybe not obviously, but let's say you're looking for longs, would you take your profits a little bit earlier than you would normally because the overall picture is bearish? Or would you change your take profits or any of your risk management because of that?
I can, because of what I've done with my strategy as of late, I can play both sides of the markets. In essence, I could get into positions and then look to see what I'd be doing if I was taking the opposite side of the position. So if it comes into a selling area, point of interest for me, I could look to jump in on the sales on the other side. So get hedged in, see whichever side overpowers and just play it from there. And that's what I can continuously do. Take a buy. If it goes up to a point of interest that sellers might get into, then I could look at it from that view and see if I could get in on the other side and just either take profits on the buyers and just see whichever position overpowers the other. So yeah, so I'm just trying to quickly through. It's not really. Yeah. It's overextended at the minute. So nothing to do. Okay, so I'm just going to work my way through, as I said, see if there's anything on any of the other majors as well.
Beautiful. And in the meantime, I think I may have seen Vincent pull the trigger on something. Now he's got his trading tab hidden. Look at that. We've got no idea. He has pulled the trigger. Vincent, can you do us a favor and just show your trading tab for us so we're able to see your balance and your equity and your open positions?
Dun, dun, dun.
Now, obviously, there's going to be a bit of a delay here.
It's funny. It's like I'm looking at my own chart.
I hope you are aware some of the when I opened the trade, when I opened the account, there was a trade open already.
Yeah.
I hope you're aware of that. Okay. All right. So there we have I know if
okay, that beautiful. That's perfect. So we can see that. So you've on straight away 2 5-lot positions, looking at 10-lot open in risk at the moment. You're shorting both the Euro CAD and the Great British Pound Aussie dollar. Aussie dollar has been moving the past couple of days. A lot of volatility pumped into the Aussie dollar pair. So very liquid.
On when you swing short on the Aussie,
Closed it.
Yo, really?
Closed it.
Yo,
Closed the
short for ages.
Yeah, I did the math with I was with a Trading Tavern episode. I think actually the next one coming out this week with Don Dawson and Aaron, and I talked about that, and I held that position for the day I opened it was like 21st of December 2022, and I closed it late last week. It might have been Friday last week, and then so one of my longest positions today, so it's a little over 9 months. I've held that short position. I've finally closed it, took the profits, and that is because my analysis has changed just ever so slightly, as that was a long-term view, and macroeconomically my analysis is altered. There's some more risks at play, and I think that's what it come down to. Like if I was asked, would I open the same position again today at these prices, I'd say no. I think the analysis changed a little bit. So I've closed it. Then I went long because I saw a really great opportunity to go long for a couple of days and did that. I've scalped that for about 2 days, which happened to, and keep in mind, this was pretty fluky that it happened as quickly as it did. And I'm not willing to sit here and say, yeah, I had a fantastic trade. It was awesome. It was pretty lucky I got the volatility that I did, but that would just happen to be in the last 2 bullish days of the Aussie dollar that really ramped up. And then I got out of those. So now I'm completely flat. No positions, all cash.
Yeah, it looks like it's in a little bit of a range at the moment.
Yeah. So I was looking way out to dailies. And as we just pop below that little, actually tell you what I can do is just... beauty is I can just show you. Let me pull it up here for you. As these positions are getting pulled as well, they're both getting in these positions. I'm going to start showing. But as you can see here, this is the Aussie dollar daily chart. As we just tapped in below here, I love the idea of fading that. So I closed my long-term position a little bit earlier. We popped below, and then I just scalped it back up and closed it out. But I've been holding this position for quite some time. So if we go back to December, all in this area was where I was first shorting the Aussie dollar, and finally closed it out down here, which doesn't seem like a huge movement. And believe me, it's not a huge movement. I think I ended up
when you look at it like
maybe...
that. Yeah, but it's a huge movement.
Yeah, but yeah, that's about 4%, which over 9 months, which was okay. But when you're trading a leverage product as well, that's 4% move in the asset, not a 4% gain in my account. That's a 4% move in the actual asset. So pretty happy with it. Long-term investment, I'd call it. I'd struggle to call it a swing, 9 months, but done and dusted. Done and dusted. All right, T's pulled the trigger. I'm just going to go ahead and mute that for a split second. But
so where you've gone on buys on the dollar, and from what I can see here, that's interesting. So your buys on the dollar against the yen, but then you're selling against the dollar for Kiwi. What's the thought process with that? Obviously, you're looking that the yen is going to stay being very weak, and then you're looking at Kiwi to be a bit stronger. What's the idea?
That's correct. And also, a lower time frame price action as well factors into my strategy. Let's pull up the UJ. So yeah, overall, looking taking up some buys on UJ. Once again, I'm in my strategy, supply and demand concepts part of it. We are in an area of demand that I like to play. So price action is touched in. For me, it's a buy indicator or buy signal for my exact strategy. All it would entail is then just lower time frame refinement. So I've just got a stop loss set in. For me, if it does push down a little bit lower and invalidates, then obviously the setup is invalidated in that context. But I'm hoping for it just to push up. Let's see if there's any particular points of interest.
Yeah, it looks wow, look how clean that is.
I don't really use my MT for chart navigation, so it's a little bit. But yeah, I'm just hoping, I'm just getting in for a lower short-term buy. Once again, it's in what I consider a buy-in setup position. So I've taken the buys in UJ. We pop it over to NU. Similar story on NU. It's just the same thing. It's once again for me, it's in a supply area. Hence, I've just quickly taken a sell. Once again, if it comes a little bit higher and invalidates, then it will take me out of the position very quickly. So I'm just going to continue looking through the rest of the charts, seeing where we are on any short-term intraday setup positions, and just look to get in. If we're in the supply zones, then just look for the sells. If we're in demand zones, just look for the buyers, and then just see which ones overpower whichever assets.
And what are you looking for confirmations to get in? Obviously, I know some people look at candles. Some people just, as soon as it gets into a supply, they'll do the sells, they'll hit the sells, they'll put their stop loss above the level, and that's it. So everybody has different ways of getting in. How do you like
exactly? Yeah, exactly as you said. Generally, dependent on the time frame, I like to operate mainly from the 4 hour, 1 hour, and down to the 15 minutes. So if we are, I generally just set my limit orders. If it's on 1 hour, I can set a 1 hour limit order. 15 minutes if there's a confirmation or confluence within a 1 hour time zone on the 15 minutes, then once again, I'll just set my limits. Generally, I don't play lower than that, just due to my record on lower time frame tradings. It's not really impressive, so I try to avoid going anything below the 5 minutes for my strategy. So far it's looking good. As you can see, I'm up probably 0.5% on the account. I've learned from the last situation. I did get up to like just over 1%, and I didn't hold the profits, and then in the end it was a challenge to try and get across the line. So I'm going to try and manage things a little bit differently. So far the positions are all in the blue, which is good. As long as it stays with the idea and context, then it should be pretty comfortable just to hold and maybe add or hedge possibly this time around.
Would you consider yourself more of a passive trader then?
Yeah, my strategy, I don't have to manually enter my positions unless I jump on a chart and it's literally in my point of interest and I can get in at a better price. But generally I can set my limits. I can set my limits days in advance, sometimes weeks in advance, and price will come to the specific zone that I've outlined and give some kind of reaction. And when it does, it just depends on the trade management after that. So yeah, my strategy is built mainly to do it around whatever I'm doing on a daily basis. So as I said, I could check my charts in the evening or during the day, set my limit orders and let it execute manually, and then just work on the trade management from there.
And trade management for you would look like trailing stops to prior swings, or
exactly that, or to risk to reward targets, such as if a trade for me, if it goes to 1 to 3 R, then I can move my stop loss to 1 to 1 to bank that, and then look to hedge or look to add positions. I've got out of the habit of adding to losing positions. It's helped in the past a couple of times, but generally it's not the best approach. And And also sometimes, depending on if it's a tight stop loss, anything around 10 pips or less, then as soon as I get to a 1-to-1, I like to move it to break even, just to protect and just to see if you can achieve a nice little takeaway. Sometimes it will just stop you out prematurely, but it's part of the process.
It's interesting because it seems like you actually do understand your strategy quite well, because you understand with the R's and understand when you're actually taking things to break even. And what is your strike rate on the strategy that you're using?
It varies. It varies into partly because of my disciplines. Sometimes, as I said, when I jump on a chart and I see price in the particular point of interest, I get too eager and I jump in too quickly without doing a full top down. And then I can see that I've entered in too early, or I can see I've positioned myself wrongly or incorrectly. And then I take additional losses. But overall, it's probably around 40 to 60%. Because I don't take all my trades on certain accounts, and certain accounts have higher winning percentages because I'm more disciplined with those, and vice versa. But I use a lot of copy trading between my different accounts, and some accounts take certain trades, other accounts take certain trades. So overall, it's probably about 40 to 60%, depending on which account. And
the average R that
I focus mainly on our multiples in. It's always at the back of my mind in relation to what I trade. So size of the trade compared to the risk of the reward as well, as well as targeting the swings or the legs that I'm trading within.
One thing I'd love to depict, I know I've been trying to butt in for like 5 minutes here, trying to get back to this.
It's super interesting. I love going in, because I'll tell you, speak first and then I'll talk about what I want to do.
No, I just want to, I guess get a better understanding on your process of moving your stops, or your risk management process, that you wait until it's 3 to R, then you bring it back, or you bring your stop to the point where it's risk-free or 1-to-1. What's the decision process behind that? Because this is something I find a lot of different traders struggle with. A lot of people will base their targets and their risk management off of either how well the trade's gone, or how much money they're making, etc. Which I can see is a very similar thing when you're looking at R, right? So you're changing your risk management once it's made a certain amount of profit, whereas there's the opposite side of the table, which I personally like to sit on, which is the opposite. It's you move your risk management in accordance to what the asset or the price is telling you, right? So there's those two, and there's no right answer here, right? Because I've seen people both very successful with both ways. But I'd like to get an understanding, if possible, in why you manage your risk that way. Because personally, I don't want to move my stop just because it's gone into profit. I want to move my stop because my analysis is saying, if we get back down here, it's a bad area to be, or et cetera, et cetera. What's your thought process in the way that you manage your risk there?
Yeah, good question. Good question, Jordan. A lot of it comes to experience within the markets, and a lot of it is the fundamentals of my strategy, in the sense that I can, or we as traders, we look at a specific price level based off whatever it is that draws our attention to that level, be it supply and demand zone, or some particular chart pattern, or just a price level itself, the value, whichever level that we're looking at. For me, just based on my experience of how price reacts from certain areas that I'm looking at, it could wick into the position and move away sharply. So if I'm in that particular trade and it's wicked into an area, then I also consider the possibility that at a future point, it can also come back to either go lower or just come back to the exact same area. And it's done so numerous times. So that's just the experience side of things, the repetitive nature of price that you see so often. My rules in relation to the trade management, such as when price goes to 3R, move my stop to 1R. That was just to deal with the simple nature of greed in a sense of always being in a trade, always trying to hold it for too long. Back in the past, I'm sure many traders go through the same scenario with them getting into a trade, setting the TP and just holding it throughout everything, just wanting that TP to be hit in a sense, just to prove that they were the right on the decision making. And obviously in the past, I've taken numerous losses just trying to hold to TP, even by 5 pips away. I've lost trades. So yeah, the strategy just developed into more fluid, being more fluid with it in the sense of, okay, what fundamentals can I add so that I'm doing things correctly? Hence, break even on the smaller stop positions very quickly, or aggressively managing my trading is what I call it. Or what additional mechanical rules can I set in place, such as the when the trade goes through 3R, move it to break even, look for other positions, don't add to your position when you're in losses. Just a few little simple rules that I try and follow as best as possible. And yeah, just it frees you in a sense that if you are following your mechanical rules, then you can, based on what you're seeing, choose to set them to one side at any given moment, just based on the price action as well. So it frees you. You've got a regimented approach, and at the same time, you know that you can flip things around if you need to as well.
Well answered.
Good answer. I can kind of relate to that as well. You know, having it's so close to the TP and just being like, okay, it could be 2 or 3 pips away, and it's so close. You know, okay, I'm just gonna stay disciplined and just leave it. You know, wait till it hits the TP, and then it ends up coming to break even, and then some more. You know, and then you're like, okay, I should have. You know, you've actually lost out on money there. You've lost out on all of that time being in the trade, and it's when it happens quite a lot. That's when I started looking at, okay, I'm gonna now start just doing an R, like 1 to 2 R or 1 to 3, mainly 1 to 2, because I know that's I get through the 1 to 2, and if it hits the 1 to 3, that's amazing. But it normally hits about 40% of the time in my strategy. It normally hits 1 to 2 R. So that's when I've been taking just now, going to 1 to 2 R, and if it goes more, it goes more. But if I get into that mindset of, you know, not taking that 1 to 2 R and just always wanting to get more out of the trade, I'll tend to lose much more anyway. And I think exactly what you said with greed is the exact reason why I was losing on the trades that I should have been winning and should have had great profits.
That's interesting. So with this question, I'm directing this to Alex, but T, I'm under the assumption that you might be similar. Please tell me if I'm wrong. When you do enter your positions and you do your analysis, you find a trade that suits what you want, you pull the trigger. Your process of setting targets, is that based on where you've put your stop loss, or is that based on where you can see this asset moving?
Oh, good question again. It's strategy dependent in the sense that I'm always targeting supply and demand zones, or imbalances within the marketplace, or previous liquidity zones, such as equal highs or equal low positions. So my strategy in a sense is the same way I get into my positions is the same way I get out my position. So I'm always targeting, for example, areas of where there's previous liquidity. So for price to sweep an area of previous liquidity, once again, either equal highs, equal lows, or just to fill an imbalance. So that same entry confirmations are also my same exit confirmations. So I'll target the exact same things on the opposite side. So I'll be targeting, once again, liquidity areas to get out of my positions, or to hedge positions to get in on the other side, and once again just to let the positions battle themselves out. So if I can make a case on the chart actually. If I'm looking, for example, on GU, I've closed out a few positions actually, just to bank some profits before I get in a few more. So I can give myself a couple to
rolling in that money.
Yeah, I've learned from the other time, so I got bank positions quick. So yeah, GU. Once again, this would be a point of interest for me. So if price comes in, and if I was to take a buy, I'd be initially looking at this little imbalance to see what may happen. If I was looking at being a seller on this position, once again, I would have just been looking to see what I can get in on this particular sell side of the position, and I would be targeting more or less where the price is coming into. So yeah, my strategy involves the same confirmations that I'd used to enter into my positions is the same confirmations that I used to exit my positions. So once again, I'll just be looking at the same things on the opposite side of the markets. If I'm looking to hold it for longer, then I'd just be looking at it on the higher time frames as opposed to the lower time frames, and seeing, okay, if I was to hold it to for example, this, if I was to get into a buy, I'd be looking at this particular zone, this particular sell side position. And if we did get up there, then I'd be looking at how I could get into sales from the exact same position. So that's overall, that's what it involves: supply and demand concepts, some imbalance plays, and just liquidity, possible liquidity areas to take some profits off the table. So yeah, that's overall, that's what my strategy looks like in a sense.
Fair enough. So yeah, so I know you obviously asked us both the question. I always used to have price targets at very ambitious levels, obviously bigger levels on bigger time frames, but I was a day trader trading on a 5 minute and a 1 minute. So you've got levels on 4 hours and dailies, and you're aiming for those, but you're trading intraday with intraday levels that you're not really paying attention to because you haven't marked them on the chart. So when I would put a stop loss, let's say for argument's sake, it would be 10 pips, which I don't have stop losses for 10 pips, but let's say if it was 10 pips these days, then I would aim for, let's say, 40 pips. And that's it. I'm in and out, and that's it. And I would take profits a little bit sooner if we've got something like a dynamic EMA that is like a dynamic part of support and resistance, mainly on a 15-minute chart. If it's the first touch of that from a big leg down, then I'm going to tend to take profits, or maybe even mostly just take the profits off the table. I won't really move the stops into break even. And that's what I tend to do these days. And I feel much better about that. Even if it does go to those bigger levels, I can always get back in when price has got past those resistance levels, and then they're turned to support and things like that. I don't mind getting back in, but I'm no longer pushing the boundaries of where price can go, because Forex is such a ranging market, and there's so much going on with commercial buying and all of these different people coming into the market all the time. Sometimes when you're on the lower time frames, it gets quite choppy, and it doesn't mean you're wrong on the position. You just might be in a position that is just getting chopped around now just because of normal buying and selling. And that's why I think putting the RR for me there was just get in, get out, and that's it. So
like I'm 100% an advocate for having risk to reward and understanding what you're attempting to get, what you actually achieve. Because well, we spoke about that in London as well. That idea of understanding your statistics so that you can analyze your probability and put your expectations where they really should be. Not, you know, over $100, I'm going to have a Ferrari next year. Be more, come on, you have $150 next year. But it's, yeah, the reason. So when you say you're averaging about 40 pips as a target now, Alex, and obviously you react to the market in accordance when you're managing. But yeah, let's just say, what's the process in you actually setting that target? Like let's say you see a position, you've nailed it, like this is where you want to get in, you've pulled the trigger, now it's time to set your target. Is there a process of setting the target, or is it a matter of whatever the R to R is compared to your stop loss?
No, if I'm seeing that, like I said, it's a little bit dynamic. I'm aiming for that. If I see that there's a level before that, or a big supply or demand area, then I'm not going to push. I'm not going to look at that and be fixated on me getting that 2R, because then I'm just, you know, it could hurt my edge by thinking that, to be honest. It could hurt the edge that I'm playing with and hurt the statistics on there. But I will look at other things in the market, like if it's an EMA, if it's a strong support and resistance level, if there's news coming out soon, I will take those things into account. So either pull trades in or just risk manage accordingly.
Yeah. And and I think you should. I think everyone should. I deal with so many people that will ask me about the strategy and their stop loss, their risk management, which would be great. But then when it comes down to actually performing, it's not ever going to hit their take profit or whatnot. They feel they need to move their stop loss in closer. They feel they need to up their position size down, whatever it might be. No one ever looks at that. They never look at where they're actually setting their targets to know, is it really achievable based on what you're attempting to do? And a lot of people have been taught risk to reward ratio, which I think is a fantastic tool, but a lot of people have also been taught in the wrong way. They've not been taught the real use that tool can be, rather than an indicator, which a lot of people are using it as. And a lot of beginners will just go, here it is, here's my stop loss, I'm aiming for 3 to 1R. And it'll just be like, where have you pulled that from? You know, nothing in this market says that we're going to get up there. You're asking a lot of the market in order to get up there. And that's the process I'm kind of wanting to get out here, is to get an understanding of how you guys battle that, because obviously it's something a lot of people fall into, and it's something I want to highlight. And like my throat is just disappearing in front of my eyes here. But like you said there, you're very dynamic, and if there is, and same with you, T, if there is something of key influence in between you and your target, you're gonna understand that, and you're gonna benefit, like you're gonna plan for it. Right, you're not blindly going up here because that's what the strategy says to do. You're still reassuring and keeping risk management in there on the upside too.
Yeah, especially if you're on bigger time frames as well. If you're on lower time frames and you're using tighter stop losses and you're looking for that push in volatility, 1 to 2 hours it's reasonable, especially in forex where it ranges so much. When you start going on to 4 hours, and price can get if news comes out, can get very choppy and things like that. You need the risk management in there to make sure that you don't do what most of us do when you're beginning, and sometimes even do now, is just let price come all the way back to your break even, and then you've lost all of that potential profits that are on the table. But
yeah, because I used to do that for my lower time frame setups. I used to have it automatically used to be a 1 to 2R TP. So my stop loss, whatever my stop loss was, if it was a 10 pips, 5 pips, whatever, my TP would automatically be set at double that, just because of what you just said there, the fact that it's very chaotic to trade on the lower time frames. So the way I do it basically is just to refine a higher time frame idea, and obviously just try and tweak it to refine an entry that aligns with it. But in that sense, you'd always have to be aggressively managing it, such as a 1 to 2R TP, or just very aggressive on the stop loss movement to break even.
How much do you think your discretion benefits or hinders your edge?
Good question. Because me, I've always had a problem following the rules, be it either rules that I set for myself or rules in society. But it's a case of especially when it comes to trading, you've got to be. For me, I believe it's an intuitive process, in a sense of whatever your strategy is, whatever your characteristics are as a person, it does filter its way into trading. If you're very rash, or if you're too quick to do anything, your trading will be exactly the same. So you can set yourself some rules that you can follow to try and keep you disciplined, in a sense. But at the same time, don't let the discipline, or don't let the rules stifle your creative way of looking at the markets, because there's a lot of things that I will do that other traders probably wouldn't do, and because they're so fixed in their rules-based format of trading, A equals B equals C, step-by-step process, so they can't creatively look at the markets in a different way, because I've learned on my trading journey, I've learned from many different mentors. So I've pieced together many different things that I've tried myself and said, okay, this works, this works, this works, this doesn't work so much. But if it was more rules based, or just following a specific set of a way of doing things, that I wouldn't be trying to creatively do things in a different manner. So I definitely believe you have to have both sides. You have to be disciplined in your approach, but at the same time, you have to be creative enough to think of different avenues or different solutions that you can come up with yourself. Because a lot of what I do, I wasn't shown. Even the way I manage all my trading accounts, I wasn't shown none of this. I had to learn it myself. I had to think, okay, what kind of processes can I set up as a trader to help me? And a lot of the things that I do now, as I said, I wasn't shown how to do it. I've just intuitively just picked it up in the sense of what helps along the way. So I do believe you have to have an ability to do both, to follow your rules, and at the same time to intuitively know when you can do things differently as well, be it in your trade management or be it in the way you structure your whole trading approach.
Two things. You've brought up a real good point there, but before I dive into that, a massive applause for you for handling this like a Traders of Money episode, right? This is like a podcast episode with T. I know this is usually a competition. Obviously, we're having connection issues with Vincent. So you're just getting absolutely grilled by questions from Alex and I. So first of all, well done for handling that, plus trading at the same time and keeping an eye on it. Good on you. We all appreciate it, and everyone at Trade Delicious does as well, guys. Make sure you're in the comments giving him some appreciation, because he is doing an outstanding effort.
No problem.
Now, to keep this going without my voice box dying, you brought up something very important in what you were discussing there, is that trading is always going to show you who you really are. It's going to bring out, no matter where you hide, no matter what you do, the trading's going to bring out that process, and you're going to have to face it, right? What can you do when you are faced with that reality? I myself have gone through it. One of my biggest issues was how lazy I was being in trading, but in life as well. And it was trading which kind of smacked me in the face and went, there's your answer. Like, do what you want with it. You know, it's up to you. This is the issue. And I struggled for a long time in figuring out, okay, how do I actually deal with this? How do I get through this? What's your experience there? What's your thoughts for someone who's just looking at a mirror in the trading chart? And if this hasn't happened to you as a beginner yet, it likely has, but you're choosing to ignore it. You know, there's going to be times where you sit back after a losing trade and you look at the chart and you think to yourself, am I putting in enough work? Or did I really stay disciplined? Was that back testing done properly? You could go through everything. There's going to be that moment where you really question yourself, and whether you act on that, it's something else. But I want to get an understanding of what your thoughts are on that.
Yeah, no, I totally agree with what you said. Actually, laziness has been one of my characteristic traits all my life, in a sense that I can get very lazy when I am lazy, and if I don't find, or if we as beings don't find the motivation to do things that we want, nobody's going to motivate you. You're not going to get a parent that's going to keep pushing you to do things into your later life. So you have to try and motivate yourself to do whatever it is. So when it comes to trading, I know in the past when I've been going through my lazy patches, not getting up early enough to do my chart analysis, or getting home from work, especially if you're combining it with other things in your life. So getting home from work and being too tired to jump on the charts to analyze, or making excuses, basically, because that's what it comes down to. The excuses that we give ourselves in relation to the things that we do, such as trading. If you're gonna say, oh, you're too tired to check the charts, or you say, oh, I'll leave it for later, and obviously you can miss opportunities in that sense. So what I found helped was definitely a lot of working on the psychological aspects of certain things. okay, what is it? I'm telling myself that I'm lazy, but is there another reason behind not wanting to do certain things or not wanting to put in the hours? So it had to be a case of self-reflection, of looking at yourself on different aspects and saying, okay, why aren't I doing certain things at certain times? Why do I keep breaking my rules? Why do I keep ignoring certain things? And then the efforts that you put into becoming more present and more disciplined in your approach to certain things, it turns around and it shows up in your results as well. So for me, a key part was when I decided to start keeping on top of my journaling. Journaling off and on throughout the years, it's been very sporadic. Sometimes I've done it, other times I've just left it and said, I don't need to do it. I no longer need to do it. But these days I'm using an automatic journal, so it's automatically linked to my account, so it does all the heavy lifting, and I've just got to do like attach my charts, write down emotions that may have crept in, or write down specific points that I've seen in the markets. So now I'm building a framework in my mind in relation to what it is that I'm seeing, and I'm recalling it either through the journals or internally through the processes. And it's definitely helping. It gives you more of a drive to be more committed to what it is that we're here to do, which is to make independent freedom for ourselves. So if you're not going to put into place those fundamental habits of being more disciplined, if that's one of your problems, or turning up when you need to, getting involved and checking the charts when you need to, and holding yourself accountable, then this journey will be extremely difficult if you haven't got that initial drive. It's just the same. I relate to my time playing football, because I grew up playing football all my life at different levels, from amateur to semi-professional level, and it's exactly the same. But the only process was football for me was a lot more enjoyable. So I could get myself up at 6 a.m. I can make sure I'm playing on a freezing cold pitch if I needed to, because the discipline was there, because of the enjoyment that was there at the end of it. So that was automatic. Whereas trading, there's not so much enjoyment at the end of a trading day unless you're in the blues, but you can put in a few hours and still end up in the red. So it's very difficult in that sense. But if you can create a passion for it, then you will do what needs to be done at any given time. That's the way I see it. Anyway.
I think something that you just pointed on there, it's as well associating the pleasure that you get in trading to something that is different from the outcome of your P&L. And once you do that, then you start to kind of tally the times where you're actually journaling, or you're getting the pleasure out the fact that you didn't trade today because you didn't see the signal in the market to trade. And those little pleasures then become the kind of motivation. And that's when your trading kind of takes a different turn. Whereas if you attach your trading just to your P&L, you could be a good trader, but the fact that even if you're having a red day, it affects you so much, then it's going to put you on tilt and going to actually ruin you as a trader. So that's a big thing. And to be honest, you can do that with absolutely everything in your life. If it's a good habit, bad habit. And I've used the exact thing that you talking about to stop like coffee, or to stop drinking, anything like that. Associate the fact that I'm not waking up the day after with a hangover. I get more pleasure in knowing that I'm not going to wake up with a hangover the next day than going out with the friends on a weekday or a weekend and going drinking. And for me, that has just changed the way that I look at even something as simple as, going for a few beers. Or,
What happened in London?
London was a tough one. London, that London traders, that trading day, we were working non-stop 2 days. It was tough on our team. And I was just at the end, I was like, I wouldn't mind a gin and tonic, make it a double gin and tonic.
You guys put in a shift on that Traders Days live event, and at the end of it, you really earned your drink then. So
it was tough, but it was more of a celebration, because you put like a year of non-stop working on it, non-stop preparing everything for it to all come together, seeing everybody in the community, seeing new faces, old faces, and talking to people that understand what you're going through. You know, not a lot of people, if they haven't gone through the same journey as you, understand what you're going through and even understand what you're even doing. You know, you talk about, oh, you trade currency markets, or even if you mention the word forex, people just suddenly think that's it. He's just doing some whatever, I don't know, but it's good to meet people that actually understand what you're going through. And yeah, Jordan enjoyed it as well. He came all the way from Australia.
I tell you what, I was spewing to know that you guys kicked on, because we all said goodbye at the pub, and because half of the team went to bed. You know, they're all like, "Oh, we've been up, it's been a long day and whatnot." And then I said goodbye to you as well, and then you're like, "Yeah, I'm heading off." And then Saul, I sit down with Saul. Oh, it would have been a few weeks ago, and he's like, "Yeah, we didn't get back to the hotel till 4 a.m." And I was like, "Where on earth did you go?" I was like, "We all left at like 7."
It was
How
such,
did you not get back till 4?
Crazy.
It was such a no, because you're not gonna be in London and just stay in the hotel. You know, I got back to the hotel after we left, sat back at the hotel. I was like, hold on a second, I gotta get all these old folks. Let's go out, you know. Like, I'm the only young. I gotta lead by example. Let's go and do something, you know.
Good on you.
And
Good on you.
eventually, we took them out, and we went to. We should have let you know. And good old.
I went out for dinner with Gary anyway, and beautiful dinner, and I think we bought the restaurant. There was so much food, Jesus. But no. But anyway, regardless, we're in Bulls versus Bears. We've completely forgot. We've managed to get Vincent back. Look at that, Vincent's back. I don't know if Vincent, can you hear us?
No,
he's gone. We almost had Vincent back. There's 15 minutes left on the clock. Alex, are you able to see Vincent's account?
I can pull up Vincent's account. Let's have a look.
Let's see if we can still get an idea, because I believe he's still been trading this whole time. So I do believe he's still well and truly involved. He's pulled the trigger on a couple more accounts, another 4 lots going out. Well, have you been sitting on cash for the past 40 minutes, T?
Yeah, smart thing to do. There you go. Once you do Bulls versus Bears a couple of times. Oh, actually, Vincent's been smashing it.
Yeah, I can imagine. I can imagine.
He's been smashing it.
I can definitely imagine.
30 lots on.
He's going heavy there now.
Heavy. Shall I?
Yeah. If you present down the bottom, you should be able to bring it up so we can have a look at Vincent's show. So this is what's interesting, because we've not been able to keep track of what he's doing. Neither has T. So T is also just trading the way that this is a random bet, right? You've got no idea on his P&L. He's got no idea on your P&L. You're just both trying to get to a comfortable position before you go, yep, that's good. Let's switch over to Alex. Here we go, Alex. We're having a look. What are we looking at? Oh, he's 3K up.
3K up.
Oh,
yeah. 3K
up. Wow. Yeah. With 13 minutes to go, too. That's putting some pressure on.
Pull up some of his history. EuroCAD. So he's been selling EuroCAD. There you go. He got short here, which, wow, he was probably underwater a good.
Yeah. How many lots are we looking at?
Probably probably about.
Oh, here he is. Vincent, can you hear us?
He probably took a lot of drawdown, though, to get there, you know. Probably in a good few grand drawdown, I reckon. No. It's about 700.
Yeah, I can hear you.
There we go. I think that was still about
my internet this morning is really disappointing because of my location. I have to move. Can you hear me?
Yeah, you probably went about 700.
Can you hear me?
To get 300. But it worked.
Let's put the pressure on. So T, how are you feeling now that you've seen that?
Well, It is what it is. It's just a different ways of playing the Bulls versus Bears. Vincent, I can see, has been very busy actually. Yeah, understandable. I know Vincent. He's very when he gets on the chart, he's very focused. So he knows he knows what he's doing, and I can see he's even got all the easy indicators and everything up and running. So yeah, he's
these are mine. This is my this is my chart. Yeah, this is my chart. Vincent, do you want to share your screen?
Sorry, I thought that was Vincent's screen.
I've logged in.
He's tried to, but I'm not getting any feed from it, unfortunately.
Oh, okay.
That's all right. So we're moving into about 11 minutes left. I think we've just lost him again. We have 11 minutes left. Now
it looks like I'm gonna have to.
Yeah, you're gonna have to pick it up, T. To be fair,
yeah, I've been sitting on my hands.
What's interesting is Vincent doesn't know your P&L. I don't think, anyway, unless he managed to hear that conversation. Vincent doesn't know your P&L, which means he's going to trade to the death. He's going to trade right to the end. Also, Alex, we might need you to cut the positions when the timer goes.
Do you know what? I think he's just sitting on his hands now because he's just got a tenth of a lot in, and he's just no, he's not. He's got a quarter of a lot in. He's got a quarter of a lot in Euro CAD, and he's just sitting on it. He's not doing anything.
Okay.
So I think he's just playing the long game now. Let's see. I wonder what he was thinking, because I know Vincent looks higher. Obviously, he learned a little bit from T, so he would have gone obviously the weekly, and then he would have gone to the daily. But that just looks at the bottom of the range. Bottom of the range here as well. Broke the range. It's come back up, retraced, and that's when he's probably looked for a break and retest kind of sell on the demand that's gone to support. That's what I reckon he would be looking at.
We're looking at Euro CAD there, aren't we?
Yeah, and this is where he's been taking most of his trades. In that little area there.
Mm-hmm.
It doesn't take a lot when you've got massive position size.
No, it can flip, and yeah, now we're down to 9 minutes left, and all of a sudden the landscape of this Bulls vs. Bears episode has just flipped on its head. It is just yeah. Oh, geez, wow. Voice really just doesn't want to show up today. But in other news, while we got time, Bitcoin moved the other day.
Do you know what? I stopped looking at the charts because I was underwater so much on my spot positions. I definitely got in prematurely. I bought spot positions very prematurely. Obviously, the Fed doesn't look like it's going to stop raising rates anytime soon. And I don't think everything is broken as much as they want to see it broken before they're actually going to start cutting rates. So I don't think Bitcoin is going to even start pumping properly until they start cutting rates and until the economy starts moving in the right direction again. That being said, we've been years and years and years and years about talking about ETFs for Ethereum and Bitcoin, and it's never, ever happened. If it finally gets approved, that is huge. That is super huge. And I'm praying to the crypto gods to make me whole again. But that's huge.
Yeah. Yeah. I can see, but what's going to be put in that ETF? Is it companies that are involved in?
Wow. Do you know what? That's why we have to put. There you go. I'll come back. Let me change camera.
No stress. Do you, T? There's the talk between ourselves. It's just us two left. Do you have a look at cryptocurrencies at all?
Not really. I just flick through occasional charts. I don't really trade or do anything with crypto at the minute. Well, I haven't really done so ever, in a sense, just because of volatility in them. It's not something I've added to my portfolio of what I trade or what I look into heavily at this present time. I've actually moved more into looking at stocks which is what I'm going to be venturing in. Just learning how to read company charts and stuff. So that's what I'm probably next going to be diving into. Yeah.
Now you're talking my language now, T. You're talking my language.
Yeah. Give me a few more months, and I'll be sliding over into the stocks and investing mentality and industry.
Don't ask. I know what you're about to say, Jordan. I know what you're looking at. Because oh god, I didn't think you put me up on the screen. I'm trying to sort these other camera out that we've got, and it's.
I'll let you. I'll leave you sort it. I'll leave you sort it. Equities I absolutely love having a look into. Don't trade them personally. Invest in them. But financial reports, that's what you're going to be doing, right? You're not going to day trade financial report. Well, you might. Might call you a little bit of a lunatic if you do so, but you might know something I don't. But equity is definitely something we talk a lot. Trade Delicious, something I love to have a look into. We did a recording the other day, a live stream, and I caught Aaron reading the Nike, or depending if you're American or English, I'm going to say Nike, right? They say Nike. I caught them reading the report just as we're getting ready to the stream. Like that's how passionate he is about these things, and we love reading these financials. And that's why I look into the macro world in FX as well. It's my earnings report. It's what I like to read. So you're barking up the right tree there, because you're in the right place.
Yeah. Haven't you just got another guy on the team that's a full-on crypto guy though?
Yes, sir. Boris Friedman. Yep. Absolutely.
On Trade the Pool.
Yeah.
On Trade Delicious.
Boris has joined us now, and you're going to see a lot of content from Boris. Is the way his brain works is incredible. So he was an ex-Bloomberg analyst. He's got a double degree in economics and psychology. And he moved over into crypto assets, absolutely aced it, worked for an exchange as the lead trader at an exchange. So everyone was, so that pressure, he has hundreds to thousands of traders replicating his trades, his portfolio managing on their behalf. And now he's willing to be a little bit more relaxed and tell us all about what he does and have conversations with us. And now obviously it's interesting because we've got Aaron coming from futures, myself from FX, and now we've got Boris from crypto. So when we all come together and we kind of explain what we've seen and how we react to these different scenarios, we're all coming from different asset backgrounds, and it makes for great diversity.
What's his outlook on what's going on with crypto?
It's very similar to you. He said, "Pray to the crypto gods." I'm not.
Yeah, that's a valid strategy, by the way. If you want an edge that works really well, 1 to 3 and you got to pray to the crypto gods 3 times a day, and that's a strike rate of about 40%.
Now, look, I think he's got a pretty good outlook long term for the assets. He probably wouldn't be heavily involved in them if he didn't have a pretty decent outlook and growth that he thought those assets can bring. So he talks a lot about it in our live streams. We'll have to do a trading tavern with him and get us together and go through, so I can sit on the sidelines and listen to you guys talk about altcoins. He's got a pretty good outlook. He, as I said, he's got a double degree in economics as well. So he's very up to date with everything going on in the US, and we're able to sustain those macroeconomic conversations. And what's really interesting is he pinpoints, and he's doing a bit of a course at the moment on Trade Delicious, if you guys want to check it out, Crypto Markets Overview, where he's explaining things like earnings. And like us, we have FOMC and CPI results. Well, there's actually very similar events that affect cryptocurrencies, and he's explaining how they affect it and essentially how to trade them as well, which I always thought there's going to be nothing that really you look for to gather and measure. But he says there's a lot of seasonality in the assets, and there's a good way of getting an understanding on that seasonality too, which opened up my mind. So obviously I don't know much about crypto. So it's been interesting. It's been really, really interesting. Great addition to the team. And I'm looking forward to learning more about crypto. You've got me talking about Bitcoin. I'm tracking the price of Bitcoin now, Alex. Why am I tracking the price of Bitcoin?
You're the one telling me that Bitcoin's pumping.
Yeah. Well, yeah, but I'm looking at everything as well. But so going back to you don't think I won't dive into macroeconomics because I know you don't massively care about it, but you don't think interest rates are going to slow down anytime soon?
Well, have they shown that they're going to slow down?
Good point. That's a real good point.
Like I think and the jobs market is only starting to see decline, only starting. So I think when jobs really start showing that there's a massive decline and people are starting to struggle to pay back certain things, and then the economy starts breaking a little bit, and then they will need to boost that back up. And how they do that is they lower interest rates to boost the economy. And then obviously you start seeing people, instead of holding cash, they want to put it into risk on assets. And that's the most basic. I'm not very big on fundamentals, but that's with my basic understanding. It just seems like that's just the way it is, and we'll see what happens. But we're still very early on, I've very, very recently been more interested in macroeconomics, and it's super, super interesting when you get into it. So it'll be super interesting to listen to you guys talking about it, because at the end of the day, you can speculate all you want on, lower time frames and try and get those massive R's. But if you've got an overall understanding of what is going on in the world, and you have an overall bias, then you can make a lot more money if you know how to trade it well. And if you do know how to execute as a trader with a big macro bias, then that's how the big boys make the big money. So
I love macro. I love macro.
Super interesting. Yeah, could talk about
I call it the cause and effect of the real world life conditions, understanding how an event can take place in a certain location in the world, geopolitical, and just understanding how the different structures can filter it through, and which avenues it transports into, and so on. Yeah.
All right.
He's closed it.
Oh, that's good, because time is up.
Wow.
So, T, if you've got any questions, going to need you to cut them instantly.
That's it.
Time's up.
Good.
That's
so,
it.
Vincent come in with $103,000 and $103,070. The profit and loss is going to be all ripped apart because of the previous position that was open.
No. I added that back in. He didn't.
Why does it say he's down $5,000?
Oh, you see there?
Yeah. 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 So it's up a little over $3,000 now. T, we were trying to distract you with macroeconomic conversation for as long as we possibly could. Let's see if you managed to pull it off. 101.34. We didn't, unfortunately. I'm lucky.
But you know what? It was good trading though, man. Super within your rules and everything, not going absolutely crazy. Just that's the way that you should be trading, even when you've got us just chatting loads of BS and stuff like that. It's super good. No, it's true. A lot of people, you can come on and just, that's it. I'm just gonna go full clip and go absolutely crazy. And it's fun doing it in this competition, because you can do it where you can't do it on normal accounts, but you've stuck to what you would normally trade, and you've shown that you can make good money in an hour.
Yeah, that's like 1.3% of the account. But yeah, as you said, you've got to be fundamentally approached in the right way, and make sure you just pieces of the pieces of the puzzle together, and just grind it steadily. So that's what I did. Took my positions early, try to bank in some profits and see how Mr. Vincent would have been doing. But as we can see, he's been secretly hammering it behind the scenes. But yeah, congratulations to him, and I'll say to him when I do catch up with him at some point.
Well, I gotta say once again, not only thank you for being a part and getting all the way to the quarterfinals too. It's a great achievement, but also for putting up with us two just absolutely grilling you for the past hour. Right, that alone deserves a medal. So no, good on you for being such a
and
good
great
sport.
answers as well. Everything is
Yeah.
like really good answers and really shows your structure as a trader and stuff. It's a solid foundation that you have.
Yeah, no, I've enjoyed it. Absolutely fantastic concept. Trader versus bulls, absolutely fun. And yeah, good luck to Vincent in the next round. I'm looking forward to catching up and seeing what happens next.
Beautiful. Well done, T. Well done, Vincent, wherever you are in the world. We will see you in the next round. And for everyone else watching, we're going to take a quick 60-second break and we'll be right back. Stay tuned. Hey guys, Jordan here. Just wanted to send you a personal little thank you for sticking around and watching us here at Trade Delicious. If you did enjoy the content, consider subscribing. Everything we do here is completely free. And of course, we have some other video suggestions here which you might love. We will see you in the next video.